Welcome back, traders. In today's lesson, we are diving deep into one of the most powerful concepts in smart money trading, the order block. So, what exactly is an order block? An order block is simply a zone where big institutions, the so-called smart money, have placed large orders. These zones usually mark the beginning of strong moves in the market. If you learn how to identify them correctly, they can become one of your most reliable tools for entries and stop placement. But here's the problem. Most beginners confuse random candles with real order blocks. So today, I'll give you a clear and simple framework to spot only the valid ones. Let's break it down into 3 steps. Step 1. Look for market structure shift. Before identifying any order block, you need to see a clear break of structure. This confirms that the market has created an imbalance and institutions were likely involved. Step 2. Find the last opposite candle. A valid order block is usually the last bullish candle before a strong bearish move, or the last bearish candle before a strong bullish move. This candle shows where smart money entered the market. Step 3. Check the reaction. A valid order block should cause a strong and impulsive move away, often breaking key levels. If the move is weak, it's not a valid zone. Here's a quick tip. The higher the time frame you use, the stronger the order block, but you can refine entries on lower time frames for precision. If you want me to cover advanced techniques like refining order blocks or combining them with fair value gaps, let me know in the comments below. And if you want daily setups, live trade ideas, and more SMC education, join my private Telegram community. The link is in the description. Thanks for watching. Don't forget to subscribe and hit the notification bell so you don't miss the next video.